Hello and welcome to this week's market update. Today is 28th of January. You're looking at a daily chart of SPY. SPY had a good session on Friday. It was up 0.23% to close at 405.68. So you're looking at a line chart of SPY. So the structure that we currently see is this. Since forming a low right here, so you can see that it's been forming higher lows. You have a low right here, a higher low right here, a higher low right here, and higher low right here. Now, it did have an opportunity to make a lower high. You can see from here, it made a lower high right here, lower high right here, a lower high right here. So it could have made another lower high, but it didn't. Instead, it ended up making a higher low right here. And if you look at the momentum indicators, you can see MACD is continuing to move higher. It has now gone above the zero line. If you look at RSI, RSI is being moving higher. So on a daily basis, I see the price structure more positive than negative. Momentum indicators are certainly positive. So overall, I would say that the pattern, the structure, the price action plus the momentum indicators are both positive, more positive than negative. If we look at the weekly basis, just to see what sort of pattern we see, you can see that it still hasn't confirmed whether this is a weekly higher low yet. For that to happen, it needs to close above the previous high, which is around 406.91. SPY closed just shy of it. So the question is whether on a weekly basis this ends up being a higher low. This was the previous low, or whether this becomes a lower high. You can see high right here, a lower high, a lower high, a lower high. So if it falls and closes below this level, then this will become a lower high. So this is not yet confirmed. But at least you can see that even from the week before, it ended up closing higher. If you look at the momentum indicators, RSI is now above the 50 level. So this is positive, but MACD is still below the 50 level, but it is moving in that direction. So I would say that the momentum indicators are still mixed, positive on the RSI, not yet positive, still negative on MACD. Price action, I would say, is more positive. So on a weekly basis, it is making progress, but it's not issued a 100% buy signal. If the price had made a higher high and MACD had crossed above the zero line, then I would say this would be a buy on all fronts. But we're not there yet. Now we've got 2 days left before the month ends, so let's quickly have a look at the monthly pattern just to see what's evolving. So at the moment you can see that SPY is just above the monthly 20 EMA. The green line is the monthly 20. You can see the monthly 20 act as a resistance a couple of times before. Right now it's marginally above the monthly 20. We still have 2 days left, so we'll see how that whether or not it's able to finish it. But if you look at the structure, this structure has the pattern of an inverted head and shoulder. If that plays out, if SPY is able to close above 407.68 by month end, then this could end up being an inverted head and shoulder. The neckline, you can draw it like this way. You can draw the neckline like this way. So if it closes above that, it would basically complete this inverted head and shoulder. You can see that on a monthly basis, RSI is now above the 50 level. So this is positive. You can see MACD is still moving lower, but remains above the zero line. The question is whether it will try to complete its corrective process by turning right here, just like right here. So that is to be determined. But on a monthly basis, it is also looking more positive than negative, because this is positive. This has the potential to be very positive, and this is also looks like you see the gap between the two lines is narrowing. The histograms are getting shorter. So if it's able to kind of flatten out and then start moving higher on a monthly basis, the technical picture will start to look better at that time. So we'll see how things develop. But coming back to the daily chart, so obviously we need to see, so resistance would be first at this level, which is around 408, and then this level right here, which is around 411. So those would be the two levels. If it closes about 411, I think that would be quite positive. On the downside, so the first area I would focus would be the 400 level. You know, it spent quite a bit, if you see the line candle chart, you can see there was, it spent quite a bit of time at the 400 level. So 400 would be the first level. If it breaks below the 400, then I would watch the 395 and then the 390. So those would be the levels. Now, next week, we could expect quite a bit of volatility. Why? Because we've got some significant news on the earnings front as well as economic front. So let's look at the economic front. Let's see, on Wednesday, 1st of February, we've got Joel's report. This will provide some indication on the health of the labor market, and then the ISM manufacturing report, which will provide some indication on the health of the economy, the status of whether or not, how close are we to recession. But I think all eyes are going to be on this number. At 2 p.m., Federal Reserve will announce their interest rate decision. Now, it is widely expected that the Federal Reserve is going to increase Fed funds rate by 25 basis points to 475. At the moment, we're at 450. So if they increase it by 25 basis, it'll be at 475. So this, and after this, Chairman Powell is going to hold a Q&A session, and that could also has the potential to basically create a lot of volatility. So these two reports plus the Fed decision on Wednesday has the potential to create a lot of volatility. And then on Friday of next week, the 3rd of February, we're going to get the unemployment report from the Labor Department, and that will, give us some indication of the state of the labor market. As you know, Federal Reserve keeps saying that the labor market is very tight. They would want to see some loosening. In other words, Federal Reserve is expecting the unemployment rate to increase. Unemployment rate is at 3.5. Consensus is at 3.6, so modest increase. So that report also has the potential to create a lot of volatility. On the earnings front, what do we see? On the earnings front, so here's the calendar for next week. Meta reports on Wednesday. So Wednesday we have the Meta report plus the Fed announcement. So these two can cause some volatility. And then we also have let's see. We also have the earnings from. We also have earnings from Apple, Amazon, Google, all reporting on Thursday. So those earnings can also have an impact on the market. So that's Thursday the 4th. So Wednesday we have Meta and Fed's decision. Thursday we have the earnings from Apple, Amazon, Google, and Friday we have the unemployment report. Those 3 days we could see tremendous amount of volatility, and the market's reaction would be key. So we'll see whether or not the reaction is overall positive, and if so, whether or not SPY is able to get through 408. I think more importantly 411, those two levels, or if the reaction is negative, whether SPY falls back below 400, and then then whether or not if that happens, whether 395 is breached, 390, those would be the levels. So a lot at stake next week, but overall I would say the pattern is more positive than negative. If we move to QQQ, what do we see? So let's look at the line chart so you can see. QQQ was able to close above the December high. And the other thing is that you can now see this double bottom pattern kind of complete. So if you look at here, you can clearly see there's a double pattern and a pattern. It has now closed above the neckline. So this is looking positive. You can see the momentum indicators are moving higher, MACD is moving higher, RSI is moving higher. If I look at the weekly chart of QQQ, you can see it has established a weekly higher high. You see it has now closed above this high from 28th of November. So this is looking positive to me. And on a weekly basis, you can see RSI has closed above the 50 level. This is positive, but MACD is not yet above the zero line. So some work needs to be done. If we look at IWM quickly, so IWM managed to close above the December high. So this is positive. So a higher high has now been established. Momentum indicators are both positive. On a weekly basis, it has now closed above the previous weekly high from 28th of November. The previous weekly high was 188.05 and it has closed at 189.58. So it has established a higher weekly high. Now you can see I have a line drawn here. This is a very, very important line. If you look at the monthly chart, you can see that on a monthly basis, it failed to close above this level. This is around 188, this is around 187.25, 187.50, that area. At the moment, we are just above that level. If IWM is able to close the month end above that, it then completes this inverted head and shoulder pattern. You can see on a monthly basis, RSI has closed above the 50 level. MACD looks like it is coming towards the end of its correction process. So this is looking more positive than negative to me on a monthly basis, IWM. If we look at Dow, just to complete the moving averages, you can see Dow has been moving sideways. It outperformed all the other averages from October to December, end of November. Since then, it's been going sideways. It's because there has been rotation going on from value sectors to growth sectors. Dow stocks are more value-oriented stocks. So that's why you can see that the Dow is moving sideways. I don't think this is necessarily a negative thing. I think this is positive. Usually when markets rally, growth sectors tend to lead the rally. And the fact that it's going sideways is consistent with what you normally expect to see during market rallies. So I'm not worried about this. I can see that there is more positive price action and momentum happening on the growth oriented. We'll quickly go through the sectors and then you'll see what I'm talking about. So if I look at XLK, this is the largest sector in S&P 500. So if you look at the line chart, it has now closed above this December high. So this now has established a higher high. If you look at the weekly basis, it has established a weekly higher high. So this is positive. Weekly RSI is above the zero line. MACD is not yet. So overall, I would say it is more positive than negative. If you look at XLY, which is another growth sector, you can see XLY has closed above the previous December high. So this is positive. On a weekly basis, you can see that it has also closed above the previous weekly high. So this is positive. If you look at XLC, this is another growth sector. On a weekly basis, look at what has happened. It has created a weekly higher high. So that's positive. If you look at the monthly chart, what do you see? You see a potential double bottom on XLC. So you can see the three growth sectors in S&P 500 are all, has established higher high on a weekly basis. If you look at XLF, this is financial. You can see on a weekly basis, you can see that it is near the top of this range. And it also has a higher high, a higher low on a weekly basis. You can see momentum indicators are moving higher. MACD above the zero line, RSI above the 50 level. So this is looking more positive than negative. This is third biggest sector in S&P 500. XLV, healthcare. This has been lagging. This is a defensive sector. So you would expect defensive sectors to kind of lag the growth sectors. Now, because this is the second largest, what we don't want is we don't want it to go all the way down. because that's going to offset some of the gains we are seeing on the growth sectors like XLK, XLC, and XLY. So what you want is, yes, it is going through its correction because it had this big run up, and there is some rotation right now from value to growth. So I can understand this, but what you don't want to see is coming down. If it comes down, all the way towards this level, then that's going to drag S&P. That's going to be a drag on S&P 500. If you look at XLB, so this is materials. So you can see that it is also looking more positive. You can see MACD is above the zero line, RSI above the 50 level. So this is more positive than negative. Industrials, you can see that MACD is above the zero line, RSI above the 50 level. It's been going sideways. As I said, there is a shift away from value to growth. So this is a defensive value sector. So you can see it's going sideways. But overall, I still see more positive than negative. You can see XLP. Now, this one you can clearly see is going down. Again, this is consistent with what I've said is a rotation out of value into growth. XLP is a defensive sector. I'll show you some ratios a little bit later so you can understand this. In fact, so let's go through the sectors. XLE, this is energy, started to go sideways. It was strong, from September to November, but it started to kind of go sideways. Again, this is a defensive sector. Going sideways is from a risk on, risk off point of view, this is not a bad look. XLRE, so this one is looking positive to me. You can see that it started to move higher. So this established a higher weekly high. So any move to the upside is going to put upward pressure on S&P 500. This is XLU, this is utilities. You can see it has started to underperform. Again, this is a defensive sector. This is an indication that money is moving away from defensive to growth sectors. So that's why this is kind of lagging S&P 500. So if we look at some of the ratios, then you will see what I mean by that. So this is XLP versus SPY. XLP is staples. You can see it does well during when investors expect market to fall. You can see during the COVID it did well, and then ever since the bear market started it was outperforming, but over the last 3 weeks you can see it has started to underperform. Again, there is a shift away from defensive to growth oriented. This is a good example. If you look at this one, these are weekly ratios by the way. So these candles that you see, these are not daily basis, these are on a weekly basis. This is XLU versus S&P 500. Again, utilities tend to do well during times of uncertainty and turmoil, and right now you can see it's underperforming. It means that investors are more comfortable with the market conditions, so they are moving towards more risky assets. So from a risk on, risk off point of view, this looks more in favor of risk on. If you look at the dollar versus SPX, again, this is again another positive data point for risk on, because US dollar tends to do well during times of turmoil, during COVID crisis, ever since the bear market started. You can see dollar was outperforming, but you can clearly see that we have this inverted head and shoulder pattern, and dollar is now underperforming. Again, it's an indication that investors are willing to take more risk and away from defensive sector. If you look at this ratio, this is TLT versus SPY. This is bonds versus stock. We've got concerns about recession. We've got concerns about economic recessions, earnings recession, and during times when we have these kinds of crises, bonds generally tend to do well. But at the moment, I'm not seeing any indication that investors have a preference for bonds over stocks. So this is another positive data point for on the bullish case. So when I look at these ratios and the sectors, I'm seeing more positive thing than negative. Now let's quickly have a look at the yields just to see where yields are now that we are coming. So this is 10-year yield. The 10-year yield is around 3.5%. You can see that 10-year yield is basically building in some concern about inflation. You can see that since reaching a high of around 4.3, it's been gradually moving lower, only because it is pricing in more slowdown in economy, recession, and that's why it's declining. It's not bulling. I don't believe that it will bull as long as we are heading towards recession, as long as the economy slows down. I don't believe that 10-year yield is going to go back up to this level. That would only happen if recession is out of the equation. If the recession is out of the equation and the Federal Reserve keep raising rates, then I could see 10-year going up. But I don't think that would be the case, because the more Federal Reserve increases interest rate, the more likelihood that we're going to have an economic recession, which means that a 10-year yield cannot be going up to these levels. So I do see an opportunity for a rebound, but if it rebounds, first thing I want to look at is this 365 level, just to see whether it can get through this level. And finally this level, this is around 390. This was the high it set in end of December. If it goes above this, then I would say, okay, maybe there's something a little bit more serious. But at the moment you can see that it's forming a lower high. If you look at the monthly chart, and if I look at the line chart, you can see that on a monthly basis it has started to form a lower high. So this is generally a negative sign. So we'll see how that plays out, but I don't believe that yields are going to rise significantly, because I think the chance of recession is high, and if that happens, then at some point Federal Reserve would have to cut interest rate. Maybe not this year, depends on when the recession happens. If the recession happens towards the end of this year, early next year, then obviously then it can go a little bit higher. But if the recession happens sooner, let's say the Federal Reserve is very aggressive, let's say instead of raising 25 basis point, they raise 50 basis point, and they take it up to over 5%, then chance of recession would get closer and closer, in which case I wouldn't expect 10-year yield to go above 4%. I wouldn't even expect it to go above this level, 390, because it is pricing in a recession. If we look at dollar, so again, dollar, if you look at the weekly basis, you can see ever since this massive move, it has now given back 50% of this move right here. And you can see the momentum indicators are weak. Again, this is again a sign that market is expecting some kind of a recession. Now, when recession happens, usually interest rate gets cut. If interest rate is lowered, there's no way the dollar can get back up to this level. So this could very well be the high for US dollar. For it to go back up to this level, what we are saying is that recession is off the table, inflation is going to be back on the table, and rates are going to keep rising, and that's when you're going to see massive run up. But I don't think that would be the case, because some parts of the economy has already weakened quite a bit, the housing market specifically, and that is going to have a repercussion elsewhere in the economy. So I don't think the dollar is going to go back up to these levels. Yes, I could see some bounce, because you can see it's very, very oversold. And if there's a bounce, I want to see whether it can get back above this level, which is around 105, just above 105. And then this level right here, which is 108. But I don't think that would be the case. There could be some rebound, but I'm not sure that I wouldn't be making a bet that it's going to go back up to this level. For this to happen, you're looking at the 10-year yield would have to go above 4.5%, possibly even 4.5%. And frankly speaking, I don't see that happening. If there is a further decline, this would be the next level, which is around 99. That would be the next level. If I look at the monthly chart is still okay. because RSI is still above the 50 level and MACD is still above the zero line. But you can see that it is heading towards a cross. If it does a cross like this and starts to move lower, then I wouldn't expect dollar to have any significant rally. Any rally is going to be faded because on a higher time frame, you can see momentum continues to weaken. So that's dollar. Let's have a look at the oil. So if you look at this is the daily chart of oil. It's having a tough time getting through this level. So this is around 82. 82. Now, my view on oil is this. If we have a recession, then demand for oil is going to weaken. And that is going to have, that's going to keep a lid on oil. Because if you look at the weekly chart doesn't look, that bullish to me. You can see MACD is below the zero line, RSI below the 50. So I'm not sure with momentum, weak, I'm not sure that we're gonna see any bullish move to the upside. If you look at the monthly chart, you can see on a monthly basis, MACD has crossed and it's moving lower. RSI is at the 50 level. This is a crucial level. If RSI goes below the 50 level with MACD crossing and moving lower, I don't see any significant move to the upside on oil. So yes, on a daily basis, we could see a pop through this level, maybe to around 87. But frankly speaking, when I look at the momentum indicators on a higher time frame, they don't look positive to me. So I'm not super bullish on oil long term. Maybe on a short term basis, if it gets to this level 82, where you see a lot of rejection, I could expect to see it up to 88 level. But in order for me to see whether it's going to bull to 100 or above, I need to see significant improvement on a weekly, monthly time frame. That is not the case at this point. So that's oil. Let's look at VIX lastly. You can clearly see that VIX big move to the downside, consolidation, and has broken down. Now, if I look at weekly basis, I can see that MACD is continuing to move lower. It's below the zero level. Yes, it's oversold, but weekly technical picture looks more bearish than bullish to me. If I look at on a monthly basis, you can see on a monthly basis, MACD is crossed and it's now heading towards the zero line. If it crosses below the zero line, then I wouldn't expect. And the other thing, if you look at the pattern that's developing, you see last month, VIX had a indecision candle. You see this green candle, but look at the candle it's forming. At the moment, with 2 days left, VIX is below the last month's low, and this is looking bearish to me. So I don't know. I mean, I know a lot of people are expecting VIX to basically shoot up like this way, unless something significant happens in the economy. I'm not seeing that happening because I can see that momentum indicators. Look at MACD, RSI is now below the 50 level, and MACD is crossed and moving lower, and this candle doesn't look positive to me. So yes, on a daily basis, we can see some bounce, but if you look at longer term trends, they're looking weak to me. So that's why you can see that lower highs being formed. So if there is a rebound, let's say it rebounds, I want to see if it can get back above this level, which is around 23 and a half. So this would be the first level I want to see if it can get back above. If it gets back above this level, then I would say, okay, maybe something serious is happening. So I would then target this level, which is around 27. But on the downside, I would look at this level right here, which is around 17. But overall, at least at this point, it is looking more bearish than bullish to me. So just to summarize on SPY, overall, I would say on a daily, weekly, monthly basis, the pattern is more positive than negative. We've got significant economic earnings news coming up next week that can rattle the market. So look for, on the upside, resistance is around 411, 408, and then 411. On the downside, 400, 395, 390. Those would be the levels I would be looking out for. Thank you very much for watching the video. I'll come back with another video next week.